Jonathan indicated, my name is Iryna Zheliasko. I'm part of the Investor Relations and Corporate Communications team here at Grove. In the last 18 months, the number of Canadian public companies who trade in the US on either OTCQX or OTCQB markets has increased by over 50%, which brings us to more than 1,000 Canadian listed companies quoted to the OTC Premium Markets as of now.
There are multiple reasons for the companies to be doing that and considering accessing US markets. The primary reason is obviously gaining exposure to probably the largest and most diverse investor base in the world, as well as to increase liquidity of its stock. There are multiple reasons for the recent increase. There have also been several amendments to regulations. For example, last September, there has been an amendment to SEC Rule 15C2-11, which we will also discuss later today. But we have a great panel of speakers, and I can't wait to introduce you to them. Each is an expert in their respective field of work, and I would like to start with Chris King, Senior VP of Corporate Services at OTC Markets Group. Chris, please tell us a little bit about yourself, your background, and obviously about OTC Market Groups in general.
Sure, thank you. Good morning, everyone, and thanks for joining. Thanks, Iryna. So, as mentioned, I'm Chris King. I head up the international team in the Corporate Services Department at OTC Markets Group based in New York. For those of you not so familiar with OTC Markets, we are a regulated market operator providing critical market infrastructure in the US. So we're a stock market in the US. The platform that we operate is called OTC Link. It's an ATS, or the largest alternative trading system in the States. And our customers, the trading firms, are the largest and most active trading firms in the States. Most of the companies that you'll find quoted on our market, there's more than 12,000 securities quoted on a daily basis. The majority of those are companies who are listed outside the US, so they have a stock exchange listing elsewhere. And US investors, advisors, brokers want to interact and purchase and trade those stocks. And it's our platform that allows those brokers to make markets and create liquidity in US dollars in US market hours. The market cap of the 12,000 securities that trade here is in excess of 26 trillion US dollars. And last year we had more than 710 billion of trading volume. So with that, I should probably speak a little bit about one of the topics we'll talk about today, which is the different tiers of the market. We do segment the market between, many of you will know the pink market. The pink market is it's the bottom tier of the market, but it's what we call an open environment or an open market, meaning that brokers can trade a variety of securities. The company is often not engaged in setting up a pink ticker, but it certainly indicates investor interest. So brokers are able to set up US tickers that represent the ordinary shares listed outside the States. But as we'll talk about a little bit later, there's a lack of information flow, a lack of verification on the credibility and the reporting status of those companies. You could be bankrupt and be trading on the pink market. The premium markets is really what we're going to focus on today. Best practice around broadening your reach to the greatest US retail and institutional investor base in the States. The premium markets are called OTCQB, our venture market, predominantly for smaller companies, earlier stage businesses, lighter balance sheets who just want to maximize their US reach. And then we have OTCQX, our top market here, where you'll find companies that you're very familiar with, but may be surprised that they choose not to list on a US exchange. Our largest client is Roche, listed in Switzerland. So, they're 250 billion in market cap. But you'll find companies like Heineken, BNP Paribas, Adidas, Hugo Boss. And if you look at Canada, there's actually more than 750 Canadian listed companies on the QB, the venture market, and more than 275 on the QX market. So there's a place on our markets for anyone that wants to explore the topic, and looking forward to talking a little bit more about it.
Great, thank you, Chris. That was very insightful. I will now introduce Sarah Morrison, President of OTC Advisory Services, who will tell us a little more about the company and what it does to help clients access and navigate across quotation to the OTC markets, and maybe a little bit about her role in it as well. Sarah?
Iryna. My name is Sarah Morrison. I'm the president of OTC Advisory Services. To provide everyone with some information about who we are, we're a consulting firm and we assist Canadian and internationally listed companies access the US market through a quotation onto the OTC markets under the foreign private issuer exemption. Also, as part of the process, we also help our clients obtain DTC eligibility, which is going to ensure the most efficient trading of their stock once they become active in the US. And hopefully this is something that Jenna can explain in greater detail today. OTC Advisory Services was founded in 2017, and since that time has assisted about 450 companies with their cross quotation onto the OTC markets, as well as obtaining DTC eligibility for hundreds more. In 2021, we were acquired by the Grove Group, which is a provider of corporate services for public companies. This merger not only provided Grove with an additional service offering to its clients, but more importantly allowed OTC Advisory Services to provide our clients with a greater suite of services and post-listing assistance. If I could give one reason as to why our clients would choose to work with us, it's that we take a process which is otherwise fairly complicated and make it simple. We handle everything under one contract with one flat fee and one listing manager from start to finish, acting as that liaison between the company and the market maker, the company and OTC market, and the company and its US transfer agent for the DTC component. We essentially take the administrative burden off the shoulders of the CEO, the CFO, or the corporate secretary who are already handling and busy running their own businesses, and make the process seamless and hopefully as successful as possible.
Sarah, indeed. If I could just add quickly to that last bit you said, I have a short story. I promise it's short. A few years ago, I was running IR campaigns for a junior resource company, and it decided to list to obtain a quotation on the OTC markets. And I was tasked with this, task, and I completed the process myself, which ended up being way longer, way more complicated for me as a non-professional than I thought it would be. And back then I didn't know about OTC Advisory Services, unfortunately. So looking back at it now, I can, confirm your words that it is better to trust the experts in a lot of things. And speaking of experts, we will now hear from Jenna Kaye, co-founder and CEO of Odyssey Trust company, leading North American transfer agent with offices across Canada as well as in the US now. Jenna, please introduce yourself and Odyssey.
Yeah, thanks so much, Iryna. So first of all, thanks to OTC Advisory Services for having us on this panel, and it's great to link up again with Chris from OTC Markets. As Iryna mentioned, I'm Jenna. I'm the CEO of Odyssey Trust company. We are a Canadian and a US transfer agent. We really play in this disruptive space where lots of issuers are looking for great service, great value, and a more nimble transfer agent that has existed in the past. So Odyssey's team has grown quite quickly. We act for over 1,000 issuers. We have 120 people across our Canadian offices, as well as in our US office. And we do a number of things. So as transfer agent, we act as the gatekeeper for mostly public companies listed securities, but we also do a number of other services for our issuers. So that ranges from warrant agent appointments, escrows under our corporate trust banner, corporate services where we do press release filings and a whistleblower program. We do employee plans, and so we provide any type of equity and cap table equity management services for our clients, as well as registered plans. And we also do corporate actions. And so really for us, our focus as a transfer agent is providing service that's simple, fast, and easy. This has been our mandate since day one. And again, there's lots of opportunity in the transfer agent world to streamline processes like becoming DTC eligible and getting an OTC quote. Some of those that we focus on specifically are virtual aspects of our business. And so we often email out DRS statements. We have a Zoom medallion guarantee program, and we also do virtual meetings. And so for us, it's really important to be giving our clients this streamlined, efficient service. And as we look to the US, what's interesting is the Canadian market, was really asking for a transfer agent that could shake things up and deliver best-in-class service. But Canadian issuers are also looking to the US. And so I'll talk about this a bit more later, but there really has been sort of a blurred line between Canada and the US, particularly over the past 3 years. I remember when Chris and I sort of first connected, which would have been, I think 3 or 4 years ago, things were like kind of at a slow tick with issuers looking cross-border. And I would say 6 months from that initial meeting, it seemed like we were talking every day, and there were just tons of Canadian issuers looking for US liquidity. And I think it's really said a lot about the brand that OTC Markets has created for itself as really a platform and a place that strong issuers can come and find a really robust investor base. So it's been really exciting for us as a company to be so closely involved with them. And so for us as a company, the US has meant we have about 100 US issuers who are listed in Canada, but are also exploring that US exposure because that's where a lot of their investor base is. And we also carry about 100,000 US shareholders. So those are shareholders that are used to a US based system and trading platform, which has made for us the move to the US really a logical one. And again, I think you're going to see a lot more issuers focus on this seamless ability to get US exposure through OTC markets.
I think now that we're past the round of introductions, let us dive a little deeper into some recent changes in the US with respect to SEC Rule 15C2-11. Really proud of myself for being able to pronounce that. I would like to ask Chris King to provide us with some additional information on these rule changes and if and how they have impacted companies quoted on the OTC Premium Markets.
Yeah, thank you. So I'm not a securities lawyer. I doubt that many of us on this webinar are, but so I'll try and keep this as light as possible, but it is important to cover this topic. And in fact, in order to understand the rule change that was implemented a year ago by the SEC that greatly affected our markets, it's actually important to understand a second SEC rule. And it's really the premise through which we talked about 1,000+ Canadian companies already cross-trading into the US on our markets. The premise through which they do that, and what makes it so convenient and cost-effective versus a US exchange listing where you're bringing in second regulator, SEC filing, second form of reporting, and Sarbanes-Oxley, and all the rest of it. SEC Rule 12G32B is an exemption for reporting, and it's the premise through which all of this works so efficiently, right? So if you look at that rule, or I'll summarize it for you, if you're listed on a qualified foreign exchange, if you report your disclosure in English, if you have no pre-existing SEC filing requirements, essentially you're able to at least explore this subject. You will almost certainly be eligible for this SEC exemption. So now you can be public in the home market, whether that's Canada or any other of the major exchanges globally. Now you can switch on the lights, have a US ticker, set up DTC eligibility if it's necessary, and certainly from Canada, it's what most of the companies do. Get your transfer agent in place to represent you on both sides of the border, and you're off to the races. But that 12G32B foreign private issuer test, what the SEC basically did a year ago was they looked at our markets, and they were quite rightly concerned with, okay, so there's 12,000 securities, most of them are listed on a foreign or a non-US exchange. Just because someone carried out a 211 review in the past, whether it was a month ago or 20 years ago, who's doing the ongoing verification that the company actually continues to meet this exemption? So absolutely correct. And the obligation now falls on OTC Markets Group as the market operator to carry out and continue to ensure that companies are quote eligible. So I realize this is a bit of a data or a factual dump, but the way in which companies are quoted on our markets is through the initial 211 review and approval. Now there is an ongoing quote eligibility issue, which the OTC Markets Group is taking on this obligation. So you're in Canada, you're public, you want to switch on the lights and be publicly traded in US dollars. You need to go through this initial review, and you need to continue to meet the foreign private issuer test. If you are on our OTCQB and OTCQX markets, you're already engaged with us. You're already posting your information through our system, through our client site. And so we're verifying certain pieces, right? We built the QX market 20 years ago. We launched the QB, the venture market, in 2014. The rule change that the SEC brought into place on September 28th of last year, that actually was refreshing because it codified into US securities law what OTC Markets has built. And so, yes, there were a lot of companies that were removed from public quotation. They didn't meet the new rule set. What we're saying here is that we built these markets over the last 20 years. They're the premium markets, and it really requires the engagement, the ownership from the company to ensure that they meet these new securities rules. So that's kind of as brief a summary as I can give you. It was a 300+ page document that the SEC produced. But the short version is, look, there is a solution. You can be compliant. You can have better corporate governance and meet standards in the US that are essential to ensure that you maximize US investor engagement, whether it's retail or institutional.
Thank you, Chris. I think your short summary was great. Now, you've mentioned that there are some large companies listed on OTC markets, but there are traditional exchange listings in the US, way larger ones. And maybe Sarah can give us a few reasons and walk us through, why a company may choose to seek a cross quotation to the OTC markets as opposed to traditional exchange listings. And when they do decide to do that, why they choose to work with OTC Advisory services. Sarah.
Sure, thanks, Iryna. And I think Chris touched on a lot of this as well, but I'll say I think there's a lot of reasons a company is going to look to the US as a secondary market for their stock. The obvious one being to increase liquidity, to get that larger investor base, and to maximize their access to the space. One of the greatest advantages that an OTC QB or QX quotation provides to a company is that they have the ability to obtain the secondary market for their securities without having to undergo that onerous process of a more traditional exchange listing. Previously, a lot of Canadian companies were even shying away from the US because of hesitancy about the additional reporting requirements and disclosure obligations, secondary regulators. So what makes OTC markets that fantastic choice for these companies is that they're able to obtain the secondary market without having to undergo any of these requirements, making it really a no-brainer in terms of efficiency, as well as the fact that it's extremely cost-effective when you compare it to the traditional exchange listing. And maybe this is something Chris can dive into a little bit later. So what we hear from our clients when they come to us to help them with this process is that they're looking to get to the US for all of the reasons described above. Perhaps they already have US investors already interested in them. So they're engaging us to assist them with the process and make it as seamless and successful for them as possible. And the benefit they get from working with us is that we've taken all of the work out of the process for the company and brought all the necessary partners together. Part of the reason that we saw such great benefit from aligning ourselves with a company like Odyssey was that we were each providing our clients with part of the service, but companies were still often having to go out and engage service providers here or there to get the job done as a whole. So what we're able to do is bring companies to us with a complete set of services, so they can get that cross quotation done, they can get their 211 done, they can get DTC eligible, but it's under one contract with one manager managing it all. So we really provide them efficiency in the process, as well as it is very cost effective.
Thanks, Sarah. Now, you mentioned DTC eligibility as one of the key items in the issuer's cross quotation. The key partner in getting this across the finish line is a transfer agent. So this brings me to Jenna. Jenna, can you please explain what it means to be DTC eligible for an issuer and how the transfer agent would fit into this process?
Sure. So for Canadian issuers, the easiest way to think about this is DTC is the US equivalent of CDS. And so to have your stock be DTC eligible is similar to having a QSIP in Canada. And really what that does is allow brokers to trade your stock instantaneously. I would say if you asked all three panelists, we'd probably say that being DTC eligible is a must to really maximize your US exposure. And so we've been very pleased to offer this service. Sarah had mentioned, I think she's going to go into a very detailed breakdown of what OTC Advisors does as part of the DTC eligibility process. But I think what we find most often as a transfer agent is our clients come to us and say, we're looking at getting quoted on the OTC markets. We have no idea where to start. You know, there's so many people that seem to need to be involved. And I think to back up again Sarah's point, what we've found just incredible and have had such positive feedback on is being able to have one person streamline and lead this process and commit to timelines and commit to a set fee and really give the issuer peace of mind that this is being handled. And that's been a big win. And we've, again, just had incredible feedback from our clients in working with OTC advisors and how they manage this process. As a transfer agent, our role in this is in the same way as on the Canadian side, we're the gatekeepers of your security. We also act in the same capacity with DTC. And so a big factor here is that you need to make sure that your US co-agent is a DTC participant, which Odyssey is. The two roles that we play as part of your process is, number one, we completed a TA attestation form. We enter into a co-agent agreement with you. And then we'll also suggest that our clients get DTC Fast. And so we're a registered DTC Fast agent, and this allows your stock to trade, again, more seamlessly through using DRS versus actual physical securities. And so these are the conversations that we have with our clients when they are looking at going down this path. And I think for any issuers or for any service providers or people and I are sort of on the call wanting to know more about what to ask at this stage of your transfer agent, some of the key questions are, how often does your transfer agent act as a US co-agent? How much experience do they have in doing this? What are the expectations around timing and responsiveness? When an issuer wants to get OTC quoted, they want it tomorrow. And so we really like to level set with people and say, you know, here's exactly what we're committing to. And I think between the three of us, we've been very efficient at meeting those timelines. Thirdly, we would ask, you know, can we have one agent for Canada and the US? And that's been a real benefit for Odyssey, being able to be a Canadian and a US transfer agent. You don't need to bring in two different service providers. And lastly is, do you have a good relationship with DTC? Because you need to get something escalated, you need to have contacts there. And that's an important relationship that we've been able to cultivate. But sort of to summarize, DTC eligibility is very important for issuers to get the most out of their US quote. And we'd be happy to answer any other questions that people have on the DTC eligibility process. I think you'll get some good insight from Sarah coming up.
Thanks, Jenna. I do believe we might get DTC questions maybe during our Q&A period. It is on everybody's mind. But at the start of the webinar today of our panel, I mentioned some stats. There are more and more Canadian companies who are choosing OTC over other exchanges in the US. We've seen an increase of over 50% in the last 18 months. And I think the question is, are there any particular reasons surrounding this increase? Maybe Chris can speak about it and let us know his thoughts on the matter.
Yeah, thank you. There's a variety of reasons, but I think first and foremost, just in its simplest form, the US is where the opportunity lies for most companies, right? It's rare that you meet a public company wherever they might be listed globally, that they shrug their shoulders and say, you know, we don't need to be in the US. Now, if you think about the US markets, small cap is defined as 500 million to 2 billion in market cap. I don't know who's attending this webinar right now, but what you probably would agree with is that it's really challenging in the small cap and particularly the micro or even the nano cap space to get investor attention, to onboard loyal, long-term, self-directed investors. How do you market to that retail community that's just geographically so challenging to regularly communicate with? And so, whilst technology and the internet has helped with this, I think that the shift for so many companies joining our market was in some ways COVID related. I can no longer travel. I can no longer physically be there in person. I need to be more proactive. I think in some cases it's an understanding that until you're large enough that you can go and knock on Vanguard and BlackRock and State Street's door, you're a retail play. And while you're a retail play, to ignore the US retail investment community is questionable. And then, I think it's corporate governance, it's understanding US securities rules. You don't drive your car with the handbrake on. So to look south of the border and say that, yeah, the US is important, but I think we can afford to sit on pink without DTC eligibility and hope for the best. I think this is generally about just more sophisticated companies understanding cross-border trading in US markets and a greater desire to be more proactive. So I don't know if that fully answers the question. There's a lot more we could talk about, but certainly compliance with US securities rules, the laws have changed. And so companies' behavior has changed.
That helps. Thank you, Chris. Now we've discussed the reasons why the companies would like to be quoted on the OTC markets. Maybe let's dive deeper into the actual application process. Sarah would be a good person to answer these questions. OTC Advisory Services has been responsible for helping hundreds of companies to get on the OTC Premium Markets. So let's say a company has already decided we will do it, we'll start the application process. What's next? Sarah, can you tell us about the process once OTC Advisory Services is engaged?
Certainly, and I do apologize because this is a bit of a mouthful, but it's one that's really important that everyone understands the complete picture of the process. So it's important for the companies that we work with to consider the work that we do really a three-step process. The first step being the submission of the Form 211 application with the market maker. And what this is going to do, it's going to assign your company a US ticker and allow you to begin trading in the US. And as part of this process, companies are going to be asked to provide to the market maker certain information on their company that's going to establish that the company is a viable company in good standing, has officers, directors, etc. So we assist the company in pulling all this information together and ensuring it's collected in a way and provided that it's in good order and going to satisfy the various compliance reviews at the market maker and with FINRA. So this really is the first step. Secondly, as part of under our mandate, we are going to help the company prepare their application to OTC Markets. So we do this usually during the same time that the 211 is under review. So we'll assist the company in completing the necessary applications, the background check documentation, as well as the OTC IQ filing. We'll assist with that. Once we make the application and OTC is assigned an analyst, that's when the compliance review will be conducted by OTC Markets. The third step, and something that Jenna has touched upon, is the DTC eligibility application. So we'll submit the application, and part of this process, and it usually is one of the least understood parts of the process, but what the company needs to do is submit a copy of a physical share certificate for use in the application. And what this is going to illustrate to DTC is that your company has freely trading shares out that aren't all held by officers and directors and insiders of the company. So we'll assist the company in how to find this certificate. We'll also set up the required US co-agency and make sure that their transfer agent sets them up as soon as possible with DTC Fast. And finally, to close out the process, we'll provide the necessary DTC legal opinion. And once the company is approved, guide them on how to make the initial first physical share certificate deposit into DTC.
Thank you, Sarah. I know that OTC Advisory Services works closely with Odyssey Trust. Odyssey Trust has been rated 8th fastest growing company in Canada by the Globe and Mail. So congratulations to Jenna and her team. The firm first launched in Canada in 2017 and has quickly become a leader in the space and has recently opened the US offices. So Jenna, do you feel like this was the necessary step for Odyssey Trust to grow in North America? Can you tell us about the reasoning for doing that and maybe where you see things going moving forward?
Yeah, absolutely. So I mean, for us, I spoke a bit about this at the start. The market for transfer agents in Canada is quite consolidated when we got into it. There's really two other players. And so we saw a great opportunity to come in, provide great service, be innovative, and really support mid-market clients and some large cap and some small cap that just, wanted a better service offering. And so our growth over the past 5 years has certainly supported our thesis about the market in Canada. And really what sort of triggered us to the US was this big push for US companies to come and list in Canada, but also for Canadian companies to look for exposure in the US market. And so I think over the long term, you are seeing the border between Canada and the US and capital markets become a bit blurred. I think issuers are looking for people like their transfer agents to provide a value add service. And so for us, that is the US market. The same opportunity actually exists in the US that we have in Canada. So the US market is also very consolidated. There's now, again, only 2 or 3 players in the space. And so it's ripe for disruption and ripe for an excellent team to get in there and really challenge on service, on cost, on innovation. And so what we've put together in Minnesota is a team of people, of industry experts that really are leaders in the space and have a ton of industry expertise, industry knowledge. And so we're looking to have ideally the same type of growth that we've had in Canada and the US. And I think, one of the things we're focused on is that being a point of differentiation from our competitors who really do sort of tend to sit in their country markets. But I think over the long term, just as you've seen international companies coming back to Chris's point, the US is not interesting to anyone. And so it's a market that we see growing, and we're really excited to take off there.
Thanks, Jenna. We're excited too. With this, I would like to conclude the main part of our panel today. We will move on to the Q&A section now. We've been receiving some questions from the audience, so we'll go through them and assign to respective panelists, or you can decide, who wants to answer a particular question. But any questions that are not answered live today, because we're trying to stick to, time frame, they will be collected and will be forwarded to our experts following the end of the event. And we're probably even putting together a frequently asked questions PDF document, so you will all receive it following the end of the event. But I'm looking at the questions now, and I think maybe Chris can take this on and answer if a company needs to be SEC registered to trade on the OTC Premium Markets.
The short answer is no, but I mentioned at the introduction level that we have 12,000 plus securities quoted on our market. Most of the companies that want to access, like I said, are already on a non-US exchange. And so if you are listed in Canada, the answer is no. There is no SEC filing requirement. That's where all of the efficiency comes in. You continue to be regulated through your home exchange. There are a couple of thousand smaller companies for whom we serve as the primary or sole market. And so those companies look at the US and say, I want to be public in the US. They are SEC filing companies. Either they're too early stage, too small to even consider a US exchange, or maybe they're like a community bank where it makes no sense. They just don't need a US exchange listing. So for the sake of this discussion, we're really talking about Canadian companies who are already public. So the short answer is no.
Thank you. Another question we have is, can I, as an issuer, use my SEDAR filings as disclosure for OTC? Sarah, would you like to take that on?
Sure. Yeah, and as I touched upon earlier, as part of your OTC application process, when OTC Markets Group sets you up, they're going to set you up with an OTC IQ platform and give you access. This is where you're going to make your filings and provide OTC Markets Group with your home country filings that are filed, for instance, on SEDAR. So once a company begins quoting onto OTC Markets, they're required to ensure that all of their home country filings, such as your financial statements, interim and annual, your proxy information, any material contracts, as well as news releases are posted within the required timeframes as they are at home for news that's immediately. And these documents are reported into the OTC IQ platform. So this is something that we assist our clients with, and we see it being a good value add to our clients. So to answer your question, yes, you use all of your SEDAR filings as your disclosure for OTC Markets, and that is all the disclosure that you need to provide.
Thank you. And I think you were describing the application process, how OTC Advisory Services fits into it. And somebody asked a question of what could be some of the issues the companies may face during the application process, some of the hurdles. I'm sure you'll I've experienced some, Sarah, personally. So maybe you can answer that question, what they should anticipate.
Yeah, so I think there's the possibility for any company to have, at some point, an unexpected hurdle when they're undergoing any type of review process, like they would if they're 211 or their OTC application process. But really the largest hurdle, I think, is the management of expectations on terms of timing with the application process. So before, when I was explaining the process, companies, when they come to us, and like Jenna explained, they want to get to OTC Markets tomorrow. This is really not reasonable. So what I tell my clients is that this is a process that involves a lot of moving parts. And working with a firm like us, we're really cutting down on a lot of the risk that your application is going to be delayed or fail. But realistically, the time frame for your cross quotation and your DTC eligibility applications is a 6 to 8 week timeline from start to finish. So we're already taking a lot of the heavy lifting from the clients in terms of completion of the necessary application documents. But in order for us to do our job correctly, our clients need to ensure that all of the follow-up requests are handled quickly and as efficiently as possible. And because the sooner we're able to make the application and address follow-up questions, the sooner that the reviewer is able to finish their job and the company is able to be quoted. So in a nutshell, really, that's what I see as the biggest hurdle, is just managing, realistic time expectations on how long this is going to take. So if a company comes in knowing that, okay, 6 to 8 weeks is realistic, it's going to make for a much happier client in the end.
And, at the end of the day, it's still collaboration between advisors and the company's management itself, right?
Exactly.
So, as expected, we do have a question about DTC eligibility, but it's more about not the process itself and what it entails, but more about why it's important for the issuer to be DTC eligible. So maybe, Jenna, you can just repeat it or add to what you've said earlier as to why does it matter?
Yeah, I mean, sort of in our perspective and in our experience, we certainly advocate for people to go through the DTC eligibility process. I think when you're looking at a fulsome US exposure strategy, I think to not include that would be a misstep. Having DTC eligibility, again, allows brokers to trade your stock instantaneously. So it allows for increased liquidity and efficiency in trading. And again, sort of back to Sarah's point, the process itself is one that's very sort of clear cut. And so having somebody lead that for you as part of your full entry to the US is key. But yeah, certainly something that we suggest thinking about. And to elevate that even more is to go through the DTC fast process, whereby you can actually deposit DRS statements and increase liquidity even further. And so I think if you're going down this path, you might as well go all the way and make the process as best for you as possible. So we certainly advocate doing both those things.
Perfect, thanks. I think we'll take one more last question. Actually, it's a pretty straightforward question to Chris. I know this is public information, so you can share with us, what is the cost of listing or trading actually on the OTC markets?
Thank you. So our fee structure is actually rather straightforward, right? So there's an application fee, which is $5,000 US for either the QB or the QX market. And then as you go through the application process with us in combination with your sponsor or the group here that we're talking about, there will be a request for the annual invoice immediately prior to launch. So that needs to be paid, which is currently it's $14,200 for the QB market, and it's $23,400 for the QX market. So, rather straightforward in terms of fees. One thing, just as a final thought as we wrap up, I don't want to make this I don't want to over-egg the statements that we've already made, but I think two things. The first is herding cats is a phrase that I hear a lot. Nothing is more disappointing than receiving a call from a company who says, I'm public, I'm live on OTC, but I'm getting calls because brokers won't transact in this security. And inevitably, something has fallen apart. It's either the lack of DTC, it's the lack of quote eligibility, it's the lack of QB or QX application. And so let someone else herd the cats for you, the experts that are on the panel. The second thing, as we talk about fees, probably worth noting that when people think about their options in the US, yes, there's our solutions. Yes, you could stay on Pink, but as we said, the rules have changed. We just did a webinar last week that analyzed the behavior and the results of the reform from a year ago. If you go to the OTC Markets site on the homepage, you'll see two things. You'll see a link to the webinar, the reform a year on, and there's a white paper there. If you look at the white paper, the most compelling thing for me, I think, as people look at the US is, since the rule change, if you look at how companies have performed, if you remove market movements and flatten that out, companies on the premium markets are now trading at a premium of 16% above their peers who remained on PIC and chose to ignore, everything that we've talked about. So it's substantial. And when you think about valuations and lowering the cost of capital and all the benefits of doing any of this stuff, these fees pay for themselves very quickly. And then, of course, the other end of the spectrum is a US exchange. We're talking secondary trading. You already have a stock exchange, you're already public, you're already compliant, you're already transparent. The cost of joining a US exchange is not just the listing fee, right? It's all of the advisors, the bankers, the commissions, the total cost. So again, I don't want to over-egg this, but I think to remain as unbiased as possible, to look at the full picture, you have options. Optionality is important, but to join a US exchange and have two regulators, two forms of reporting, your D&O insurance is going to be many, many times more than the cost of joining our markets alone. And so people don't talk about this stuff, but it's really important to look at the full picture. But anyway, that was my final thoughts.
That was great. That was a great ending to our panel today. Thank you, Chris. Thank you, Jenna and Sarah. I would like to thank all of you for sharing your knowledge and expertise with our viewers. Thank you to our audience for joining us today, and for those who will be watching it afterwards. We will have a replay available. I hope you found it as useful as I did, and I will be passing on the recording to my clients and anybody who is considering the OTC quotation. There are many these days. I encourage you to do the same to the people in your network who might be interested. And as a special thank you for joining us today. For anybody, all companies that join us live, OTC Advisory Services and Odyssey Trust is extending a discount for their services. Watch out for an email with more details following the end of today's webinar. It was my pleasure hosting this panel today. Thank you all.
Thank you. Thanks for hosting.
Thanks, everyone.
Thank you, Iryna.
All right, ladies and gentlemen, that concludes today's webinar for OTC accessing US markets. Those of you who did join a little bit late or weren't able to make the whole call, as Iryna did say, we're going to have this meeting recorded and available to watch at a future date, which will be stored at agmconnect.com/October 04. That is the same place that you registered, so you can attend that and watch that later on in this week. Thank you, everybody, once again for attending. This meeting is now concluded.